Test, 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 test. The committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. Without objection, members of the full committee not on this subcommittee are authorized to participate in today's hearing. This hearing is entitled the Community Reinvestment Act, Reviewing Who Wins and Who Loses with Comptroller Ottings' Proposal. And I'm now going to recognize myself for 4 minutes to give an opening statement. To my colleague and ranking member Lukamaya and members of the subcommittee, welcome to this hearing on modernizing the Community Reinvestment Act. This hearing is our second on this subject this Congress, following one we held on April 9th, 2019. The Community Reinvestment Act was enacted into law in 1977 as a direct response to the long, painful legacy of structural discrimination, financial exclusion, redlining, and economic suppression of racial minorities in America. At its core, the CRA is a civil rights bill. It was the fourth of a series of banking bills passed to address systemic discrimination in banking, including the Fair Housing Act of 1968, the Equal Credit Opportunity Act of 1974, and the Home Mortgage Disclosure Act of 1975. These bills built on the finding of the 1961 report from the U.S. Commission on Civil Rights and community-led civil action in Chicago to hold banks accountable for rampant discrimination in lending. Any efforts of reforms and modernization must remain true to this legacy. Broadly speaking, there's an agreement that CRA needs to be modernized, that it needs updating in the age of online banking and fintech, that all stakeholders can benefit from greater transparency and predictability in CRA oversight examination, and that there are important opportunities to build on the experience from the past 25 years since CRA was updated. I was greatly disappointed to learn that Mr. Ottings pulled the plug on the interagency working group to modernize CRA and insisted on plowing ahead with an approach that was widely panned in comments to the ANPR. Indeed, the core framework put forward by the OCC using a simple ratio has been thoroughly picked apart as inconsistent with the original civil rights intent of CRA, breaking the link between CRA activity and the low and moderate income communities, and in particular communities of color for whom the law was meant to bring redress for decades of systemic discrimination. A real head-scratcher here is the fact that the banks themselves are deeply concerned about this proposal and believe that it leads to a worse outcome from everyone than the current CRA framework. The fact that OCC is taking a shotgun approach to the rulemaking and they issued a request for data to support this new rulemaking after publishing the rule is further evidence of a process that is being railroaded. Finally, by abandoning the interagency process, Mr. Ottings is making it more likely that Congress will have to legislate on CRA and that banks may face a fragmented national CRA landscape going forward. With 4 more of the vastly different CRA regimes, including one, the current CRA framework for banks with assets under $500 million, which were exempted by the OCC FDIC proposal, the new OCC FDIC framework for the banks to which it applies, the Fed's framework, which may be put forward as a rule. Some states have indicated that they may add CRA-like rules for banks in the event of the OCC's framework is adopted. This is regulatory chaos and should have been entirely avoidable. I applaud the Fed on putting forward a methodical, data-driven approach to CRA modernization and strongly encourage them to publish their proposal as a rule to allow comments and contrast with the OCC's proposal. And finally, I would strongly encourage the OCC and FDIC to allow as much time as necessary, including a 120 days comment period, to fully consider comments and data analysis of their respective proposals and to explore options to eventually merge their process with the Feds to allow a continued national harmonization of CRA rules. With that, I now recognize Ranking Member Lukamaya for his opening statement.
Thank you, Mr. Chairman. I'd like to start out with a few facts about 1977. In 1977, the Dow Jones closed the year in the 3,000s. Currently, it's almost 29,000. In 1977, a gallon of gas cost 65 cents. Currently, it's $2.59. In 1977, the first Star Wars movie released, and we're still getting more Star Wars movies today. And last but not least, in 1977, Jimmy Carter signed into law the Community Reinvestment Act, or the CRA. The CRA was originally enacted to ensure banks are appropriately servicing their communities. However, more than 40 years after its enactment, and 30 years since it was significantly amended, the CRA has become an outdated, onerous regulation that does not reflect today's banking sector. In a world where handheld computers, internet access, and mobile banking have become norms, establishing CRA assessment areas solely based on geographic location, in my judgment, is an outdated notion. The OCC and FDIC's proposed rule to amend and modernize the CRA would provide clarity and transparency by requiring regulators to develop and publish a list of pre-approved CRA activities, allowing banks to accurately assess and meet the needs of the communities instead of waiting for an examiner to make a determination after the fact. In addition to examining the geographic location of a bank, the proposal would include additional assessment areas based on deposits of a bank, taking into account the technological advances in banking and online banks. By considering deposits, the rule would expand CRA assessment areas of banks, limiting CRA deserts and decreasing CRA saturation in many urban areas. The proposal contains many provisions aimed at helping banks serve their communities. However, I would like to point out the process this administration has taken in developing this proposal. The notion of updating the Community Reinvestment Act is not new. Regulators in this administration and the previous administration have a long history of collecting information regarding CRA modernization. In fact, the FFIEC began conducting field hearings in 2010 on CRA, and in 2018, the Treasury issued recommendations to update the law as well. Continuing the transparency of this rulemaking process, the OCC issued an advance notice in August of 2018 and received over 1,500 comments before issuing the proposed rule. The OCC has also met with more than 1,100 individuals from consumer and community groups, academics, trade associations, and the banking industry to receive information on specific areas of the CRA that need to be addressed in this rule. And in accordance with the Administrative Procedures Act, the OCC and FDIC have announced a 60-day comment period for this proposal to solicit even more information and feedback from stakeholders. I would encourage all parties involved to submit comments on this proposal to ensure it increases transparency for institutions and consumers while improving the ability of banks to serve their community. While the process throughout this proposal has been transparent, the Federal Reserve ultimately did not join the FDIC and OCC in this rulemaking. Instead of the prudential regulators joining together to issue one consistent update to the law, an apparent bureaucratic turf war could leave bankers with the uncertainty of a bifurcated rule. Hopefully, by the time this rule is finalized, the administration will achieve a uniform rule to modernize CRA. Hopefully today we can learn more about efforts to achieve that goal. And with that, Mr. Chairman, I look forward to the testimony of the witnesses before us, and I yield back.
Gentleman yields back. I now recognize the gentleman from Georgia, Mr. Scott, for 1 minute.
Thank you, Mr. Chairman. As we know, last month, the OCC and the FDIC put forward a notice of proposed rulemaking that would make changes to the Community Reinvestment Act. But, Mr. Chairman, our committee has to make sure that any changes that they may offer do not weaken the law's work to undo harmful and racial discriminatory practices in banking. That's what the law was put in place to do, so that we will be able to make sure that we end any discrimination against customers based upon where they lived or racial indicators as opposed to their credit worthiness. And also, Mr. Chairman, we're moving rapidly into a highly technological age. It makes it even more important that we understand and we make sure that as we move in this advanced technological age with online lending and mobile banking, that we be extra careful, because we don't have enough of the profound financial literacy out there for people to be able to handle this advanced technology. Our work is before us. Thank you.
Gentleman's time has expired. I now recognize the gentleman from North Carolina, the ranking member of the full committee. Mr. McHenry is recognized for 1 minute.
Well, thank you, Chairman Meeks, and thank you for your thoughtful leadership, as well as you, Ranking Member Lukemeyer. I applaud the OCC and FDIC for proposing a CRA reform package. I'm dismayed that the Federal Reserve has been dragging their feet and won't participate in this process. Look, I think it's important that we update CRA. The last time it was updated, it was before most Americans even had dial-up internet, and a smartphone was having any phone that wasn't connected to a long wire into a wall. And so that, needless to say, it was before mobile banking. It was more before online banking helped to serve so many in our community. And before the branching strategy of banks has changed, and it's changed severely in the last, and dramatically in the last 5 to 10 years. So this proposal takes into account all of those changes. I think that's positive. So I look forward to hearing from witnesses and stakeholders about how we communicate additions and changes, and we get this thing done in a timely fashion.
Gentleman's time has expired. Today, we welcome the testimony of first Ms. Jerron Levy, Director, Policy and Government Affairs and National Community Reinvestment Coalition. Ms. Levy is the attorney with nearly 20 years of federal and state government affairs experience. Her background includes serving in the Maryland General Assembly, where she authored laws on education, crime and ex-offender reentry, and was a member of the National Conference of State Legislatures, the National Black Caucus of State Legislatures, the National Foundation of Women Legislators, and the American Council of Young Political Leaders. During her tenure, the Maryland State's Attorneys Association named her as the Legislator of the Year in 2010. She also served as an Assistant Director of the Legislation Department of the AFL-CIO and as a Legislative Representative for the Laborers International Union. Next, we'll have Ms. Paulina Gonzalez Brito, the Executive Director of California Reinvestment Coalition. Ms. Gonzalez has worked for over 20 years leading economic justice, organizing campaigns to expand workers' rights, immigrant rights, and the rights of low-income and underrepresented communities of color. Under her leadership, CRC has grown to 300-plus members, gained higher visibility, expanded its focus areas to include immigrant financial protection and fines and fees work, and negotiated community reinvestment agreements with 5 banks worth more than $25 billion. She currently serves on the Community Advisory Council of the Federal Reserve Bank of San Francisco, the San Francisco Municipal Bank Feasibility Task Force, and the Board of Directors for the National Association of Latino Community Asset Builders, and was formerly a member of the CFPB's Consumer Advisory Board. Next, we have Mr. Eric Rodriguez, who's the Senior Vice President, Policy and Advocacy for Unidos US. Mr. Rodriguez oversees the Office of Policy and Advocacy, which is charged with directing the organization's legislative affairs, public policy research, policy analysis, and field advocacy work. He is responsible for Unidos US federal and state legislative priorities and agenda. Mr. Rodriguez has extensive experience overseeing the Unidos US public policy and advocacy activities on a wide range of issues. From 2007 to 2008, he served as Deputy Vice President of the Public Policy Department and previously directed the Policy Analysis Center. His background also includes work on such issues as tax policy, Social Security reform, welfare reform, workforce development, retirement security, as well as housing and financial market regulations. Mr. Rodriguez also serves on the boards of the Food Research and Action Center, the Fair Election Center, the Unidos US Action Fund, and is a member of the National Academy of Social Insurance. Prior to Unidos US, Mr. Rodriguez was a Congressional Hispanic Caucus Institute Fellow and served in U.S. Representative Nydia Velasquez's New York office. Next, we have Ms. Hope Knight, who is the President and CEO of Greater Jamaica Development Corporation. Ms. Knight has served as President and CEO of Greater Jamaica Development Corporation since 2015, I should say Greater Jamaica Development Corporation in New York. In that capacity, she served In that capacity, she has advanced the economic growth, community building, and sustainable real estate development that has immensely revitalized and strengthened the greater Jamaica Queens region. Appointed by Mayor Bill de Blasio, Ms. Knight also serves on the New York City Planning Commission, a role which supports planning for equitable economic expansion, strengthening of housing affordability, and increasing job growth in New York City. Prior to leading the Greater Jamaica Development Corporation, she was Chief Operating Officer for the Upper Manhattan Empowerment Zone, overseeing over $150 million in direct capital, leveraging over $1 billion in private capital, and working on projects such as the East River Plaza, the Harlem Stage, and the Victoria Theater. She also served as Vice President at Morgan Stanley in the Institutional Equities Division, U.S., and as Vice President of the Strategic Planning and E-Commerce at Morgan Stanley, Japan. And finally, we have Ms. Faith Bautista, President and CEO of the National Diversity Coalition. She's also the President and CEO of the National Asian American Coalition, a HUD-approved home counseling agency, and the nation's leading Asian American nonprofit advocating against foreclosures, advocating for greater economic and small business development, and in advancing the growing economic and social power of Asian Americans. Appointed by President Trump's administration in 2017, Ms. Bautista is currently serving a 4-year term as one of the 5 members in the U.S. Treasury Department's Community Development Financial Institution, CDFI Fund, and Fund Community Advisory Board, and a member of the advisory boards for the Federal Communications Commission on Broadband Adoption and Diversity, and for the California Utility Diversity Council. She serves on the Corporate Advisory Board for First Republic Bank, Royal Business Bank, Citizens Business Bank, Charter Communications, and was a former advisory and board member for CTI One West Bank. So without objection, each of y'all's written statement will be made a part of the record. And now I would recognize Ms. Levy for 5 minutes to give your oral presentation of your testimony.
Good afternoon, Mr. Chairman, Ranking Member, and the members of this subcommittee. Thank you for the opportunity to testify and for this important hearing on the winners and losers in the OCC's proposed rule. I can say without equivocation, the winners would be the nation's largest banks who would promote glowing CRA ratings to the public because they will have easier ways to meet their CRA obligations. The losers would be low and moderate income home buyers, renters, small businesses, small farms in their community, and the CRA ecosystem built to support better economic opportunities for them. We concur completely with the FDIC's Mr. Grunberg, for this is a deeply misconceived proposal. The purpose of CRA is unmistakable. Congress aimed to reverse disinvestment associated with years of government policies that deprive low-income areas and communities of color of credit by the practice of redlining. That was and is the reason for the law, and the legacy is still with us today, and lending discrimination is ongoing. The statutory design of the CRA and its regulatory framework to date has been about curing for market failures that keep some neighborhoods thinly traded even when there are profitable lending and investing opportunities available for the financial institutions chartered to serve them, and unmet credit needs that are safe and sound to meet. NCRC's CEO, Jesse Van Tol, has called this a stealth gutting of CRA because it is a fundamental rewrite that significantly changes incentives under the law, but only the agencies fully understand its impacts, the new benchmarks and thresholds, but they fail to share what they know and estimate with the public. Our forthcoming FOIA requests will ask them to share more. At the outset, we have a must-do list for the agencies about the process in the name of fairness and transparency. First, extend the public comment period. The proposal is complex and has many interconnected elements. The impact on bank incentives to participate in a range of financing activities cannot be understood and analyzed in 60 days, plain and simple. We thank the members of this committee who have urged the regulators to give the public more time. Second, release the missing data and analyses. The agencies have estimated the impact of this their proposed numeric benchmarks and thresholds using a variety of bank samples and other information. All of the underlying data analyses and modeling of the impact on bank ratings and performance should be released. Governor Brainerd laid out some illustrative data and charts last week about their approach, and that is a good start. Third, complete and finalize the agency request for information on data released on Friday that, in cruel irony, closes for comment the day after the overall rulemaking. The data RFI will inform critical pieces here of the CRA evaluation measure or dominant single metric and presumptive ratings, including how to measure bank capacity. We really need to know this so that we can meaningfully comment on how severe the rationing of CRA credit will be. On to the substance. The CRA evaluation measure is an overly determinative single metric that ensures rationing of CRA credit. The public comments were on all sides were clear, no single metric. The agencies added a supplement, but we have a single dollar volume metric triggering presumptive CRA ratings, and more grade inflation is built into it. The presumptive CRA ratings are arbitrary benchmarks that undermine the economic rationales for CRA, and the agency should really show their work on them. The expansion of CRA qualifying activities extends credit to bank activities done in the ordinary course of business and upends exam incentives that keep LMI considerations at the heart of the law. The new deposit-based assessment areas, again, have a lot of arbitrary triggers in them, and there are data limitations. For example, how many credit deserts would be picked up, if any, by that proposal? The retail lending distribution test is pass-fail, has arbitrary triggers as well on demographics and peer competitors, and is overall a weaker incentive for banks to facilitate home ownership, small business, and small farm lending. The service test is virtually eliminated, and the 1% credit for bank branches in LMI areas is inadequate, and exams for affordable financial services and products is wiped out. I look forward to discussing more about this proposal, but the largest U.S. banks made more than $120 billion in 2018, an all-time high. CRA standards for local LMI reinvestment should be strengthened and not weakened, plain and simple. Thank you.
Thank you for your testimony. Ms. Gonzalez-Brito, you're now recognized for 5 minutes.
Thank you, Chairman Meeks. Thank you, Chairman Meeks, Ranking Member Luetkemeyer, and members of the subcommittee for holding this important hearing and inviting CRC to testify. Good afternoon. My name is Paulina Gonzalez-Brito. I am Chicana, the daughter of immigrants from my ancestral land of the Purépecha people in Mexico. CRC is the largest statewide reinvestment coalition in the country, with a membership of over 300 organizations that serve low-income communities and communities of color. I am also a proud member of NELCAB, and CRC is a proud member of the National Community Reinvestment Coalition. You should know that CRC works. While the CRA can be improved, Comptroller Joseph Ottings' proposal is a deregulatory scheme designed to help the largest and most powerful banks. It will weaken CRA rules, undermine the purpose of the statute, and will ultimately harm low-income communities and communities of color. When Comptroller Ottings was CEO, One West had one of the worst reinvestment records in the state. CRC tracks reinvestment data in California, and in 2013, out of 12 banks analyzed, One West ranked 10th or 11th from the bottom. As one example of One West's lack of reinvestment activity under Mr. Ottings' leadership, the bank made very few small business loans. In the final quarter of June 2015, under Mr. Ottings' leadership, One West did 1/10 of the amount of small business lending in comparison to banks of the same size. As another example, during Mr. Ottings' leadership, One West had 15% of its branches in low to moderate income or LMI communities compared to 30% for the rest of the industry. Mr. Otting has written this CRA rule so that banks like the one he led that do little reinvestment can ace their CRA tests. For example, the Comptroller's proposed CRA rule benefits banks by loosening the rules around small business lending and by devaluing the importance of branches and LMI census tracts. On redlining, Comptroller Ottings certainly does have experience. While Mr. Otting was CEO of the bank, One West had 70 branches, but only one branch was located in an Asian American majority census tract, and there were no branches, none, in African American majority census tracts. During his tenure over a 2-year period, the bank originated only 2 mortgage loans, that's 2, to African Americans and the greater Los Angeles area. That's hard to believe given the size of LA's African American population. It would be bad enough if One West merely did a poor job meeting community credit needs as required by the CRA. But in fact, the bank that Joseph Otting ran also substantially damaged community credit needs through mass foreclosures. Most of this harm was inflicted on communities of color. Between 2011 and 2015, when Mr. Otting was CEO of One West, the bank foreclosed in neighborhoods of color 3 times as often as it made mortgages in neighborhoods of color. We are concerned that the Comptroller's proposal will lead to a return to redlining and more harm to communities given its focus on the one ratio that prioritizes quantity over quality and overall numbers over serving local community needs. CRC and over 100 organizational opponents of the One West CIT merger raised many of these concerns during the public comment process for the CIT One West merger. As part of the merger, Mr. Otting solicited letters of support from his Wall Street contacts via a form letter on the bank's website. Our analysis of those letters observed a number of anomalies. Our suspicions were confirmed when CRC received a call from a supposed supporter of the merger who was upset his email address had been used to support a bank merger he knew nothing about. He said, quote, his identity had been stolen. Our subsequent FOIA request to the OCC uncovered documents reflecting email exchanges with the OCC from individuals upset that they had been listed as supporters for a merger they had never heard about. The letters at issue supposedly submitted by these supporters appeared to be the same form letter that Mr. Otting had urged his Wall Street contacts to submit via the bank's website. What does this mean for the integrity of the CRA public comment period overseen by Mr. Otting himself? We also have concerns based on Mr. Otting's public statements regarding his ability to fairly receive and incorporate public input. Comptroller Otting was quoted as saying, certain community groups know how to hold you hostage during that process, and they use your lack of compliance in between the reviews to be able to do that. Perhaps most alarmingly, Comptroller Otting was quoted as saying, we won't tolerate groups that do not provide services to these communities to disrupt the process and affect our decisions. Perhaps he doesn't believe in democracy. These comments suggest that the Comptroller cannot be trusted to objectively consider public comments from community groups, just as he is soliciting public comments on plans to weaken the nation's primary anti-redlining law. The proposed rule led by Comptroller Otting will do great harm to communities of color and low-income communities, while advancing the interest of big banks who have little interest in reinvestment. I thank you for the opportunity to discuss our concerns today.
Thank you for your testimony, Mr. Rodriguez. You're now recognized for 5 minutes.
Good afternoon. Thanks to the chairman and ranking member, as well as members of the committee, for the opportunity to testify today. Our remarks will echo many of the concerns already raised. My name is Eric Rodriguez. I'm the Senior Vice President of Policy and Advocacy for Unidos US, formerly the National Council of La Raza. Unidos US is the largest Hispanic civil rights and advocacy organization in the United States. For over 25 years, I've worked on issues such as the Community Reinvestment Act that lie at the intersection of economic inequality and civil rights. Unidos US is a unique civil rights organization in 3 critical ways. 1, we combine advocacy with research and analysis of the Latino community. 2, we leverage our policy expertise with on-the-ground experience, administering culturally competent housing and financial capability programs that are proven to reduce wealth and income disparities in communities. And 3, we partner with both government and industry to change practice in ways that advance the economic interests of the Latino community. First, I want to touch on very quickly the important history of CRA. Then we'll highlight just a few of our concerns with the plan by the OCC and FDIC that we also believe would really weaken the intent of the CRA. And last, we'll recommend an alternative approach. The first thing is, look, discrimination and disparate impact in banking has been persistent throughout our history and often exacerbated by our public policy. For example, in the 1930s, the Homeowners Loan Corporation created a universal risk appraisal method that classified neighborhoods based on occupation, income, race, and ethnicity of residents, literally drawing red lines where people of color constituted the majority. Limited access to credit has consistently undermined the vitality and the mobility of communities of color and the neighborhoods where they live. In many ways, Chicago served as the birthplace for the resistance movement against redlining decades ago. In 1969, the West Side Coalition, a community organization in a Polish neighborhood with a growing Puerto Rican population, identified the problem well. Members of the community have been denied loans despite good credit histories. They protested until the group secured a meeting with the bank's president and the chairperson of the board of directors, and this became and sparked a nationwide campaign to place equitable community reinvestment on the national agenda. Subsequent research documented nationwide redlining and bolstered the case for action. And Congress then acted with the passage of two important and critical bills, the Home Mortgage Disclosure Act of 1975 and the Community Reinvestment Act of 1977. Over 40 years, CRA has encouraged regulated banks to lend to LMI communities of color. CRA helped to revitalize neighborhoods by increasing mortgage and small business lending. In our research based on National Survey of Mortgage Origination data from 2014 to 2018, we found that the CRA had bolstered home lending for Latinos and facilitated between 15% and 35% of home loans to Latinos in LMI census tracts. This was about 2 to 3 times the share of loans to their white peers in the same census tracts. The OCC and FDIC's recent proposal seeks to update the CRA. We certainly agree the CRA should be modernized. But we have grave concerns with their approach, and I'll just highlight a few. First, in order to enforce the CRA, regulators currently look at banks' assessment areas defined in the regulations regarding where bank branches are, or some physical presence located to gauge whether a bank is in fact meeting the credit needs of its community. With the growth of banking on the internet and smart devices, the current approach for delineating assessment areas should certainly be expanded, but not at the expense of physical branch locations. As discussed in our own research, the Future of Banking report co-authored with PolicyLink, physical presence still has an impact on whether residents of LMI communities have access to mainstream banking. Research also shows a direct correlation between the number of bank branches located in a neighborhood and the availability of credit. Second, the plan would allow for community development activities that are outside of the original intent of the CRA. These activities do not serve the credit needs of their communities. We are troubled by the laundry list of qualifying regulatory criteria proposed. The new approach would weaken the impact of CRA on LMI communities. Third, the proposal does not articulate how regulatory agencies would solicit, review, and weigh public comments of community organizations. In essence, the plan would strip community out of the Community Reinvestment Act. In 4 decades since CRA was proposed, the law has increased bank lending in LMI communities. For Latinos, it is still important and relevant. In 2017, FDIC National Survey of the unbanked and underbanked households found that while 6.5% of households overall were unbanked, 14% of Latino households, 16.9% of black households were underbanked. A better approach to modernizing the CRA would be for regulators to negotiate with the civil rights community and lawmakers and work with the Federal Reserve to ensure one uniform set of rules for financial institutions to follow. Rules of the road that are flexible enough to meet the challenges of a changing marketplace while continuing to effectively address disparities is the goal we all share. Thank you.
Thank you for your testimony. I now recognize Ms. Knight for 5 minutes.
Good afternoon, Chairman Meeks, Ranking Member Lukemeyer, and members of the subcommittee. Thank you for the opportunity to testify today. My name is Hope Knight, and I am President and CEO of the Greater Jamaica Development Corporation. GJDC is a not-for-profit that works to promote responsible development in Jamaica, New York, and Southeast Queens. As a leader of an economic development organization in a formerly redlined community, the CRA is foundational to my work. I have studied the NPRM and had the honor of helping to lead a tour of Jamaica for Comptroller Ottings and the OCC. I'm here today to discuss significant concerns I have about the ideas presented in the NPRM, and that I believe would significantly weaken the CRA and hurt the community that I serve. That community, Jamaica Queens, shares a history with many urban communities of color across the United States. Redlined in the 1930s, Jamaica struggled to attract private investment. In the 1960s and 70s, Jamaica's economic base further eroded as white flight drained the downtown of residents and businesses. The culminating disinvestment left Jamaica in a vicious economic cycle. Targeted federal programs like the CRA helped start a reversal of this cycle. Recently, and owing in part to their interest in securing CRA credit, banks financed transformative development projects in Jamaica, including ones that bring more affordable housing and good jobs to Southeast Queens. As a community development financial institution, GJDC has been able to lend to small businesses with the help of banks' contributions, often given to meet CRA obligations. However, Jamaica still bears the legacy of redlining, suburban flight, and disinvestment. As evidenced in our tour with Comptroller Ottings, many areas of Jamaica remained banking deserts. Potentially catalytic projects struggle to secure financing, and low-income residents have trouble accessing loans. If changes are made to the CRA that dilute its impact, Jamaica will struggle against such economic headwinds, and the recent progress growing Jamaica's economy will be put at risk. With regard to the NPRM, I am particularly concerned by several proposals. From my work in economic development, it has become clear that to be effective in spurring equitable economic development, regulations must have clear and well-defined geographic targets. Instead of focusing on a clear geography, the proposed regulation greatly expands where banks can get CRA credit, allowing for investment in areas outside of local assessment areas, making it less likely that financial assistance will flow to communities and projects that need it most. As one example, under the rules of the NPRM, any investment in a low-income opportunity zone would be an eligible activity without any consideration of economic development benefits or community needs. Retail banking is of paramount importance to neighborhoods like Jamaica. As Comptroller Ottings mentioned after his tour of Jamaica, there are areas in Jamaica served by few or no bank branches. Compounding this, the nation's persistent digital divide creates a barrier to accessing financial e-services for those in low-income census tracts. Without branches, many residents depend on high-cost alternatives like corner store ATMs and check cashing services. As such, I am very concerned by the proposed regulatory changes that eliminate the current large bank service test and examination of basic banking accounts for LMI customers. By moving forward on proposed regulatory changes without the Federal Reserve, the OCC and the FDIC would create a two-tier regulatory system that adds complexity and confusion to an already complicated sector. While larger money center banks may be able to navigate this added burden of complexity without too much difficulty, smaller institutions may be hit hard, especially minority depository institutions. The CRA is complex. Changes to the regulation will have far-reaching impacts. The short comment period does not allow enough time for adequate comment. The comment period should be extended to a total of 120 days. The changes to the CRA regulations currently proposed by the OCC and the FDIC will hurt economic progress in LMI areas and undermine the anti-redlining intent of CRA. As such, I oppose changes described in the NPRM and look forward to answering any questions related to my testimony. Thank you.
Thank you for your testimony. And Ms. Bautista, you're now recognized for 5 minutes.
Thank you so much. Before I read my testimony, I just want to tell you that don't believe everything what Ms. Paulina is saying, because we are here. We're HUD-approved counseling agency, and we have helped so many homeowners in California save their home, and One West saved a lot of the people that are needed foreclosure. Thank you. We must do better. NDC and the National Asian American Coalition, which I also lead, represent underserved and minority people and small businesses who are left behind by our current system. I work directly in our communities to provide lending, counseling, and training solutions to our most vulnerable. For NDC, reducing the number of underbanked is our North Star. We believe CRA has failed for one primary reason. CRA qualifying lending and investments are not measured. Whether this is by design or by neglect, it is harmful to the communities I have spent my life serving. It is remarkable and offensive that the current CRA regulations do not track CRA activity on an industry-wide level. Frankly, it might be the only data that regulators do not think worth collecting and evaluating systematically. I have had the honor to meet with the Federal Reserve chairs and governors over my decades of advocacy. At each meeting, I asked them the same simple question of whether CRA lending and investments have been increasing or decreasing over the prior 5 years. The answer each time is that they simply do not know. Conveniently, the current approach to CRA provides no way of measuring the number of loans or the volume of dollars being invested in underserved minority neighborhoods. That needs to change. This information is necessary to aid a serious data-driven analysis seeking to understand the real impact of CRA. With no data and no measurement comes no accountability. The current approach turns a blind eye to low-income and minority communities. For example, instead of using metrics to gain mergers approvals, banks simply make unregulated promises to increase CRA investments in a future that never comes. Today's hearing is to determine who the winners and the losers would be from CRA reform, but the current regulations do not collect the data necessary to measure who is currently winning or losing. Working every day in communities of color, I can tell you today, the CRA losers are America's low-income communities and minorities. They are the people served by NDC, NAAC, and our members. The stories of abuse and neglect faced by America's immigrants, minorities, and others we serve would break your heart. NDC believes that underserved communities will only win when there is a real transparency that measures each bank's CRA activity objectively, discloses it timely and publicly, and allows comparison against peers and regulatory targets. Data and accountability must replace excuses and stories. Today, the question should not be if the CRA proposal is perfect. It is not. Instead, we must ask if it improves upon the current approach to CRA and provides a new paradigm able to break the cycle of poverty and neglect faced by America's most vulnerable communities. The definitive answer is yes. The OCC and FDIC proposal would improve the current system in 3 primary ways. First, it will clarify what qualifies for CRA credit. No more guessing. That helps community planners and advocates make the most of our resources. Second, it updates where a bank receives credit for CRA. It recognizes the advent of the internet, ending loopholes for internet banks and wholesale banks. This enables banks to help underserved communities where they have depositors but no branch to receive CRA credit. Third, it will provide timely and transparent reporting that measures CRA-related activities using standard metrics. We will all finally be able to confirm that banks are increasing their CRA activity in underserved and minority neighborhoods. NDC believes the proposal set out by the OCC and FDIC will increase CRA activity by over $100 billion. Should not that occur, the OCC and FDIC must commit that they will raise the requirements for satisfactory and outstanding CRA ratings to ensure that CRA investments increase as promised. The proposal also closes loopholes that currently allow bankers to trade loan back and forth between banks to claim multiple CRA credits for the same loan. It will also end the CRA credit for gentrification and displacement when banks finance wealthy people purchasing homes in poor neighborhoods. It is true that the proposal can benefit from further modifications during the public comment period. For instance, loans guaranteed by federal government should not receive CRA credit. Double dipping on federal subsidies does not increase the amount of capital reaching underbanked communities. We pray that the Federal Reserve awakens to the urgent need for change. Today's status quo continues to fail over 30 million disproportionately minority American households, Fear of unintended consequences is not a good reason to stick with a failed system, and for 4 decades has resulted in generational poverty and desperate impact in our communities of color. We are confident that this proposal will, at long last, begin the process of reducing the unacceptable number of underbanked in America. Thank you so much.
Thank you. I thank all of the panelists for their testimony today. And before I recognize myself, I ask for unanimous consent to enter 4 documents into the record. One is a statement for the record from a Mr. Richard Hunt, the President and CEO of the Consumer Bankers Association. And the statement speaks to the importance of getting CRA modernization right and ensuring that concerns raised are adequately addressed. It's noteworthy that in this document, the CBA raises concerns with the OCC's request for data, which came after the publication of the rulemaking. Second statement for the record is from Mr. Noel Pollo, Executive Director of the National Association for Latino Community Asset Builders. In this statement, Mr. Pollo outlines key concerns with the OCC and FDIC's rulemaking, including ignoring comments from the ANPR and diluting the focus on LMI communities, likely reducing investments in rural and other hard-to-serve communities and other issues. The third statement for the record is from Mr. Aaron Glantz, Senior Reporter at Revel from the Center for Investigative Reporting. And as a reminder, Mr. Glantz testified at our hearing on CRA modernization in April 2019 on his groundbreaking report on modern-day redlining. And this statement, for the record, provides a detailed, troubling account of Mr. Ottings' time at One West Bank. And 4, a statement for the record from Mr. David Dorkin, President and CEO of the National Housing Conference. In this statement, he reminds us of the history of discrimination and redlining that led to the passage of CRA and the broad agreement on key pillars for CRA reforms, but outlines specific areas where the OCC's proposed rulemaking falls short of the commitment to holding true to CRA's original intent. And I now recognize myself for 5 minutes for questioning. My first question to go to Ms. Levi. As I have stated in my opening remarks, I've had private conversations with banks and banking groups, and they are quick to state that they didn't ask for the OCC's framework and expressed a list of concerns if this approach were to be implemented, posing operating complexity, reputational risks, and significant uncertainty. And in the letter I just entered into the record from the Consumer Bankers Association, they state that more analysis must be undertaken by stakeholders to better understand the impact of the new metrics that will be used to measure CRA activity for individual institutions and the communities that they serve. And the CBA appreciates the OCC's recent effort to consider the impact of a more quantitative approach through additional data collection, but feels the true cost of reforms must be understood before dramatic changes are made. Can you speak on this?
I can, and we've heard a lot of the same concerns. I was at a housing tax credit conference last week, and for a lot of the folks who participate in that market, they are concerned about more financing gaps, not less, because of the incentives under this proposal are off. It also points up the process concerns I outlined. We don't have enough time. It's complex. It's interconnected. And the agency has not made it easy because they have not shared a lot of their data analyses, their data analyses and modeling.
Now, is there, and how does the OCC's proposed rulemaking impact the link between a bank's CRA activity and direct lending, especially mortgage lending to low-income communities of color?
Well, the bottom line is that the retail lending distribution test in this proposal is weaker, okay, and is going to make addressing problems this committee is focused on, for example, the racial wealth gap, a lot harder to get banks to participate in it. Also, you can fail in half of your local assessment areas and still pass at the bank level. There are a number of problems with it. a lot of some arbitrary thresholds in it, and you know, there's no review of mortgage lending in LMI neighborhoods at all.
Thank you. And Ms. Knight, I know in your testimony you talked about doing a tour of Jamaica, Queens with Mr. Outing. And during that tour, he saw the extent of banking deserts and the important needs for loans and financial services and the great disparities in access to credit and housing in the community. Can you speak, and I know there were several other people from the community that was there, can you speak to the feedback that Mr. Outing received from the community, specifically as it relates to the OCC CRA proposal?
We were able to show Comptroller Otting to illustrate how few bank branches there were in Southeast Queens. And as a result, small businesses in the community don't have the opportunity to develop relationships with traditional financial institutions. And that is something that many people on the tour, advocates, community leaders, spoke to the Comptroller about. We also were able to show him where many of the alternative financial activity happens in corner stores and check cashing establishments.
Thank you. And let me go real quickly. Mr. Rodriguez, do you consider the CRA to be a civil rights bill?
Absolutely, yes.
Elaborate.
Yeah, I mean, if you think about the origin of CRA as in part of the testimony, but also what we know of how organizers in Chicago really identified the problem of disparities, where you had banks that were investing even abroad and not investing very much, if at all, in their own local communities. That's what sparked it as a major movement, and ultimately shined a light on inequalities that needed to be remedied through changes through Congress. Absolutely, it's a civil rights law.
Thank you. My time is just about expired, so I now will recognize the ranking member, Mr. Lukamaya, for 5 minutes for questions.
Thank you, Mr. Chairman. Ms. Bautista, you were pretty adamant in the discussion of the lack of data that the CRA, that the Comptroller now collects under the CRA law. That's concerning to me from the standpoint that how can they make good decisions on whether it's working or not?
So, Congressman, I think this CRA reform, we know that needs to be reformed. It's been 25 years. The OCC's been working with this for the last 10 years and extensively in the last 2 years. We believe they have data. And the data that OCC and FDIC has the same data with the Federal Reserve.
You know, you were about the only one that, as we went through the process here, that, you know, pointed out the problems, had some solutions, then also indicated the good points about what the law does or what points it actually fixes or things that you support. And it was interesting to me because I think that's where we can point out the problems. If you have no solution to the problems, you know, we're not getting anywhere. And I think even Mr. Rodriguez made the point that you know, this has got to be updated. I mean, the law doesn't have anything in there with regards to internet activity, mobile phone activity, online lending activity, which is a modern day, everyday practice now.
Correct.
You know, if I was all of you there, I think I'd be concerned about some online lending that doesn't qualify for CRA. Some of these folks can make online loans and don't have to comply. That's what I would be arguing about if I were in your seat. I didn't hear anything like that today, which is surprising to me. But I think, Ms. Bautista, you indicated that one of the good points that this new rule, the proposed rule, is talking about here is clarifying what actually qualifies for CRA. And to me, having been in the business for a long time and had to work with this rule, this is always a problem that I had with this because there's a lot of good things that an institution can do to invest back in its community and in these particular communities of lower and moderate income folks that we're not given credit for, even though they do it. And they do it because they want to do it. They do it because they want the community to grow. They want to be successful. but yet they're not given credit for it. And then when the examiners come in, they pound them over the head because you're not doing anything. And it's kind of like putting a square peg in a round hole sometimes. It's hard to get that done. So, do you have any other additions to the list that you see that was presented that you thought would be helpful?
Yeah, and this is what we love about this CRA reform is because when I was reading it, there's like 200 clarifying CRA. I just want to give you some example that we're doing something in San Diego, and there are 3 banks that are participating. One bank did not participate because they were not sure if it's CRA related. So even though it's the right thing to do, now I can tell the banks and I can, justify that this is CRA related because it's now identified in the 200s. As a community organizer and very much CRA involved, it is so refreshing that there's finally guidelines. And for the internet banking, it has changed, right? I mean, 25 years ago, nobody deposits through their mobile. Now I don't even go to the bank. Even the immigrants that I serve, they don't hardly go to the banks anymore because everything can be done through iPhone. So things has changed. So we have to adjust to the needs, especially for the low, moderate income and people of color.
One of the things that concerns me is that in the past year, it's always about location. But yet, whenever you take deposits from an area, to me, there needs to be some money going back in investment into those areas. You shouldn't just be taking deposits out. You should be investing back into those areas. And to me, this new rule does that, does it not?
Yes.
To me, this is a really big deal because
It is.
to me, and this is also, it goes into your online lending folks, wherever you get that money from, you need to be putting some of that money back into farm investments, not taking everything from over here and investing it over there, which is what's being done right now to a certain extent. So I appreciate your comments today, and I'll yield back the balance of my time with that. Thank you.
The gentleman yields back. I now recognize the gentleman from Georgia, Mr. Scott, for 5
Thank you, Mr. Chairman. Ms. Batista, and during your testimony, you said, don't pay any attention to what Ms. Gonzalez was saying. And I wanted to get some clarity on that because that really got my attention. Because that was a very profound statement, and I want you to explain that statement. Why shouldn't we pay attention to what she was saying? What was so profound about it?
Thank you for asking me that. My daughter always tells me, if you don't have anything good to say, don't say it. And the reason I can say that is because I was there when people were losing homes. I lost my home in 2009, and nobody was helping me because there was no process. So I was very adamant in helping people losing homes. And during the financial crisis, a lot of the borrowers that comes to National Asian American Coalition or any HUD-approved counseling agency, we have to have a good relationship with the banks. At the end of the day, the lender still makes the decision, but Comptroller Otting, Mr. Otting then, made sure that his people, I still remember Tony Evers, bring people to all the outreach we've done from San Diego, Central Valley, Bay Area, and helping homeowners in
my time
distress.
is slipping away. But the reason I raise that is because we're faced with some very biting concerns about this rule. You also said that the Fed had the same data. Data is very important here. The same data as the OCC and the FDIC. But why is the Fed staying away from what you're pushing?
Good question. Because to me, the Federal Reserve, I love them. I love all the 3 regulators. They're in the data-driven, the research. But sir, at the end of the day, the people I'm serving, they don't care about data. They need help now.
Okay, let me turn to you, Ms. Levi, and to Ms. Brito. First you, Ms. Brito. I wanted to ask her that because our primary concern here is that we have problems and evidence, it seems, that what Mr. Otting is offering does not only does not enhance the purpose of the Community Reinvestment Act to do away with discrimination, but that it might increase racial discrimination, you see. And so we have to get to the clarity of this. So, do you and Ms. Levy agree with what Ms. Leo Bernard said? She said that any proposed changes to the CRA regulation must be grounded in analysis and data to avoid unintended consequences.
Absolutely.
And do you believe this data is here? Go ahead.
Absolutely, and I would say that data does not lie. To Ms. Bautista's point, there were 36,000 foreclosures in California alone under One West Bank, and a third of those were when Mr. Otting was CEO. And so data is absolutely important. The Federal Reserve, with Governor Brainerd, has made their data public. They looked at 3,700 banks, 6,000 performance evaluations, and made that data available to the public as they released their metrics and looked at how would banks perform under those metrics that they're proposing. The OCC has not released that type of data, and it's clear now by having an RFI process after releasing their proposal and then having that data not due until after the comment period. It means that the public is not going to be able
I know,
to.
I want to get Ms. Levy in here. Go ahead.
You know, this Federal Reserve Governor Brainerd really nailed this, okay? And why don't we have that kind of data about this proposal? Implementing a big, dominant, single metric framework that incentivizes banks to run up the numerator with a lot of activities that aren't focused on LMI communities and people, okay, that need the benefit of CRA credit is not the way to serve the communities that Ms. Bautista purports to represent.
Well, thank you. Mr. Chairman, we may need
Gentleman's
to
time
get
has
the Fed in here, the Federal Reserve in, before we move forward. This is serious. Thank you.
Carl. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman. While the banking industry has changed substantially in the past decade, the Community Reinvestment Act has not been meaningfully revised since 1995. And I think we all know that we live in a different world now than we were in 25 years ago. And I'm sure we all can agree that the CRA can be updated to better serve low and moderate income areas. The OCC and FDIC's proposal, I think, is a welcome change to the out-of-date regulations. So first, let me turn to Ms. Bautista. You outlined in your testimony how the CRA has failed to accomplish its mission. Can you expand on how the OCC and FDIC's proposal recognizes that the CRA should not follow a one-size-fits-all approach?
Oh, yeah, it's definitely not one. This is why the foreclosure crisis, it took so long to help people, because the regulations, the banks always have a one-size-fits-all. Even for Asian community, the sub-ethnic group, it's not the same at all. So it cannot be. What I like about this is, there's benefits to citizens and community members. There's local emphasis. We're now going to make sure that if you have a branch there, over 5% deposit, that they will contribute on CRA. There's also benefits for the development of practitioners, advocates, small farms, small businesses, and like the Indian country that's never been served before. I'm really excited about that because we have so many constituents, like over 1 million, that every day you hear what they need. The Indian country, the payday lending there is so much. And now with this increase of CRA dollars, I think the payday lending, hopefully we can just bury them.
Ms. Bautista, you've just explained and have explained several times in your testimony that the new proposal would increase CRA activity. How can the regulators in Congress sustain this increase in the long term with this proposal?
You know, we need to calibrate, right? Banks have a hard time getting outstanding CRA. Most of them, they're okay with satisfactory. We need to ensure that this is why I also like this, is because quarterly, they're now gonna be reporting. Right now, they report like every 3 years, or yeah, their examination is 3 years. I mean, I'm not so technical, but now I can see that every 3 months or quarterly, they can do the reporting. So we know that they're going to increase their CRA investments.
We've had mention in the hearing about the comment period.
And can I,
Just one second, Ms. Batista, could you expand on the aspects you see of OCC and FDIC's proposal that could be improved in the comment period? Perhaps even through a separate proposal maybe from the Fed?
Yeah,
What could be made better in this comment period? What should people be talking about?
This is why we need to do a lot of outreach. This is about low, moderate income, right? This is about people of color. English is the second language. I think since they've been doing this for so long and extending it until March 9, we got to get people involved. The people of color, what do you need? What are the banks should do that they are not doing? What are the regulators' examinations should be? And for the Congress, and I'm so glad you're doing this hearing, because this is like the voice of the voiceless, as now we're telling you what's needed. So we have comment period. Let's get to work. If you don't make a comment, then forever hold your peace. Don't ever complain. Say everything that you need to say, plus or minuses. Nothing is cast in stone until it becomes a law. And to me, even if it's a law and if it's bad, you should still change it.
Thank you. I yield back, Mr. Chair.
The gentleman yields back his time. I now recognize the gentleman from Illinois, Mr. Foster, for 5 minutes.
Thank you, Mr. Chair. And I think we're really all agreed that our goal is modernization and alignment with actual need on these, but we have to do that without formulas that will be gamed by the players in this, so that you don't actually get the results you want. One of the things that concerns me is that many of the CRA qualifying activities are now going to be dollar-based. Seems to me this is going to encourage banks to make a small number of mega deals and things in areas that technically qualify. Whereas if they got some credit for the number of activities as well as simply the dollar value, they would help a lot more smaller businesses, help a lot more individuals by providing them banking services. And I was wondering, Ms. Levy, Mr. Rodriguez, or anyone, if you could comment on that.
absolutely right. And banks will get a lot more partial credit for activities that are not targeted to LMI people in areas. So the standard has shifted as well.
Yeah, I know. I was sort of surprised to learn that apparently, maybe even today, that loans for stadiums, sports arenas, jumbotrons qualify for CRA credit. And so this seems like the kind of mega deal, large thing that is not going to help a large number of people. And so that some change in the formula that gives you credit for helping large numbers of businesses, not a large dollar volume.
Yeah, the formula and the primary purpose test has been jettisoned here, so it's both. But it absolutely quantity over quality, large over small, all the wrong incentives for CRA purposes.
Yeah. Ms. Rodriguez?
Yeah, I would just add there's no test around the quality of the investments anymore. So it's watering down the investments and decreasing the potency. So maybe we could have more CRA investments, but more of them will be worthless with respect to community reinvestment in the ways that the law intended and that we hope to get to. So these are the critical concerns with the proposal and the plan so far.
Yeah, and so you're worried. So now we're left with just a geographical definition, rather than the purpose of the loan. Is that?
Go ahead. Yeah, I mean, we're left with a lot more activities that are not guided by the primary purpose of LMI, and a lot more partial credit. So that does allow banks to run up the numbers. And the exam is designed under this proposal to make banks look as if they're doing more. But as Mr. Rodriguez said, it will have less impact on the communities and people the statute was enacted to serve.
Yeah, now, this clarity argument that Ms. Batista has been making, do you see merit in, having more clarity instead of having some human or regulator saying, well, I think that qualifies or partially qualifies? Is it actually going to be more productive to have a very long list that's very specific versus a more general language that's just in the intent of what you're trying to do?
Oh, for the banks, you got to be specific. Otherwise, they'll find excuses. And we need both.
So the banks make their own call under the current system as to what qualified?
I think we want clarity, and we do like the idea of having more data, but we're not going to trade clarity and data for impact. And I think that's what this proposal does. It makes a trade for the core purpose of CRA, which is serving LMI communities, to make it easier for banks to be able to get that outstanding rating. And so it trades communities for Wall Street, basically.
And the Federal Reserve Governor Leo Brainerd did, laid out some of their approach last week, and it's multiple metrics. So it is possible to achieve clarity for banks and communities without this dominant single metric that really incentivizes dollar volume. And if I can correct one assertion by the Congressman very quickly, this is a one-size-fits-all proposal, regardless of bank model, regardless of community needs. This is the definition of a one-size-fits-all proposal, and we're not the only ones that's
along those lines, I was just, in the few moments I have here, I was sort of surprised that small businesses up to $2 million in revenue will qualify. But for some reason, if the business is a farm, it's $10 million. What is the reason for that that's ever been proposed? Why treat one business differently than another?
Your guess is as good as ours, but I will tell you on the farms, only 1% of farms had sales over $5 million or more. About 76% of farms had sales of $50,000 or less. So small farms are not the focus with that change there.
Thank you, and yield back.
I now recognize the gentleman from Florida, Mr. Posey, for 5 minutes.
Thank you, Chairman and Ranking Member, for this hearing. The Community Reinvestment Act is heralded as one of the foundational civil rights acts of the last century. We all have an interest in a financial system that serves the needs of all, a system without bias. I strongly identify with that goal and believe that our goals of equality in the financial services, as well as other objectives, are best pursued by ensuring that our free market systems are efficient. Where financial institutions focus on their shareholders' bottom line, banks and other institutions can be expected to see the profit motive as inconsistent with an arbitrary exclusion of customers based on race or any other irrational criteria. Ms. Batista, I'd like to believe that fair-minded financial institutions would want to show off their activities that demonstrate their contributions to serving the needs of their depositors and assessment areas. Can you share your experience related to the attitudes of those who are evaluated under the CRA?
So I was told not to say any bank, so Bank A, Bank B, Bank C. Bank A, they make commitments, right? I mean, we're involved with so many settlements with all the banks. There's a lot of settlements, but after 5 years, do we really see, did that move the needle? Did they increase home ownership in the African American, Latino, and Asian? The new CRA reform is so refreshing because there's accountability, there's transparency, And there's also now a pressure from banks to do the right thing and to increase their CRA. The CRA should not remain satisfactory. To me, they should all be outstanding. But a lot of them cannot be outstanding because they're missing just half a point or 1 point. And I asked them, why is that you're not outstanding? It's so hard for them to say it because there's really no guidelines. Now, with this reform, they will now know, okay, my CEO, we're going to be outstanding, and we're going to do a lot of planning. We're going to do investing in what they're talking about, the stadium. I agree with that. We should really thought it out. And now this project can be really examined. Is this something that it's easy to give loans to big hospitals, to stadium, because they can do that loans all day long, right? Because they have the right financial. But for us, like the CDFI, there's so many good CDFI in there that are not getting investment because we're not savvy enough, because we're nonprofit. I mean, even with Ms. Hope here in New York, and I sit on the advisory board, there's 1,100 CDFI, and they can do so much. Now, CDFI is another way to do more micro-lending, to do more small businesses, to do more home loans to those that doesn't fit the box with the lenders.
Okay. Does any substantial part of the community see CRA ratings as an opportunity to showcase how well they serve the needs of low to middle income people?
Yes. You know, CRA is a godsend. CRA it's like God warning them, do the right thing. So
Okay.
we got to make it right.
Okay. Do many just see it merely as a regulatory burden?
Yeah.
Yeah. Would you say 50-50, or what do you think?
Well, you know, the CRA regulations, it's too expensive for the small banks to comply with their CRA regulations. That's why I think over-regulations is not good. And it's the unintended consequences of that is they will not do funding anymore to nonprofit that does the job that we should all be doing because they spend more on the regulation. So that's why, you know, the big banks should not be treated the same way like the smaller banks.
Okay.
And community banks understand who they're serving. They know their borrowers.
How do you think we can design a process that overcomes that?
You know, you have to leave it to the OCC, Federal Reserve, and FDIC. They're the regulators, and I think with the input of us, this is why this is great, you know, the plus and the minuses, and more information. We have until March 19. We're going to do a lot of town halls, and we're going to be asking the realtors, we're going to be asking the loan officers, we're going to be asking the borrowers that are being denied, and they should not be denied. From owning a small business to owning a home. Do you know that there's $100 billion of mortgage loans that are denied because they don't fit the box? No, I'm a good borrower, but because of the foreclosure, my credit score did not go up for 5 years. And I have been borrowing. I put 20% down. I don't owe anybody. But my credit score is so artificial. It will not go up. It goes up and down. It depends on the day, on the time of the day.
Thank you.
The gentleman's time has expired. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and welcome to the committee. Today we see that home ownership among African Americans and other minorities continue to fall behind. And how do you see the Comptroller of the currency OCC proposed changes in the Community Reinvestment Act, CR, affects the ownership, home ownership of minority groups that suffer from these financial crises? And I'll just start with you, Ms. Levy.
Well, let me contradict something that Ms. Batista said here about CRA and the home ownership gaps and things like that. First of all, let's keep it in perspective. CRA covers about a third of the mortgage market. So we do have to keep it in perspective. Secondly, 98% of banks are passing CRA exams today. It is really not a big problem for them. I will say this, the retail lending distribution test is pass-fail. There are some low bar but arbitrary thresholds around local demographics or peer comparators included in it. And overall, the CRA retail test used to be half of the exam. It is now, again, pass-fail, and you can fail in about half of your local assessment areas, your local communities, and still pass at the bank levels. And I think a lot of underserved communities, rural communities, should be concerned about that in particular. You know, as I said, I think it makes addressing the racial wealth gap that much harder.
Go ahead.
I just wanted to add, I also wanted to correct Ms. Bautista. When we do analysis of CRA data in California, the community banks and the non-big banks do better than the big banks in their CRA investments and lending in California.
Anyone else want to comment?
Yeah, can I add?
Yeah, go ahead.
Okay. Well, I was just going to add, it's an excellent point, and just one fine point is that the homeownership rate of the Latino community nationwide is 4 percentage points lower today than it was a decade ago. If we put 4 million Latinos into homes today, we would just be catching up with where we were over a decade ago. And the reason is access to credit and affordability that is crucial to our communities to get back to where we were, let alone. And CRA can be an important part of the solution if it's done right.
If I can just make a comment on the African home ownership, I know I'm so glad you mentioned that because it's all-time low. And we work a lot with Black pastors, and we have do a lot of workshops in the African American. We need to do a proper education because for the African American, they don't even know sometimes, can we own a home? It's a different culture, so the financial literacy should be different in different cultures. And for the African American, needs a lot of financial literacy, needs a lot of down payment assistance, needs a lot of extra help.
If I could just say, I think the problem is racism and systemic racism, and not what Ms. Bautista is talking about right now.
Yeah, I'm trying to get some clarity. Ms. Bautista, can you finish?
Yes, thank you so much. But you know, CRA is about the people. It's about the low, moderate income. Let's focus on that. Let's do the right thing for all of us. And let's not interrupt, at least, you know, be decent. Thank you.
Ms. Gallus, Ms. Leva,
I just wanted to say on the financial literacy piece, there is also a shift under this proposal. This awards CRA credit for financial literacy for everyone. Again, not targeted on low and moderate income home buyers for which, small businesses and others for which the statute was designed. It just opens it up for everybody. I think, you know, low, moderate income minority borrowers should be the focus of even that piece, which Ms. Bautista mentioned.
Ms. Gonzalez, I have about 20 seconds. Did you want to say something?
Well, I just wanted to say that one of the things that this proposal does is that it makes it easier for banks to reach those satisfactory and outstanding ratings. It gives double credit for community development lending. And if I told my son that he could get double credit for doing half his homework, I would tell you right now he would do half his homework. And that's what we can expect from this proposal.
Okay, thank you. Mr. Chairman, I yield back.
Gentleman's time has expired. I now recognize the gentleman from Kentucky, Mr. Barr, for 5 minutes.
Thank you, Mr. Chairman. I just have to take exception to that last comment. The community bankers that I know in central Kentucky, that's not their attitude. They want to help their communities. They don't want to do it half-hearted. Every day, they go to work and they try to help the low and moderate income people of their communities, especially in rural areas. That is a mischaracterization of community bankers in Kentucky, at least, in my experience. Now, I do want to also, it's my time.
The time belongs to the
I just
gentleman.
wanted to make that comment. that's not the way the community bankers of my district behave, and I just wanted to
And
say
our
that.
data for
And let me,
community bankers
I want
does
to, it's my time, and I want to also correct another thing that was incorrectly stated. Ms. Levi made the statement that this is the Fed's position. I do recognize that Lael Brainerd has a position on community, specifically for the community, but as I understand it, Ms. Brainerd was speaking in her own capacity, not on behalf of the Fed. And the OCC's been working on this for about a decade, by the way. This is not fly-by-night. Let me ask one question to Ms. Knight. You were critical of the proposal to allow CRA credit for investment beyond a defined geographic assessment area. But you also stated that that lack of physical branches, this is a very reasonable point that you made. You said that the lack of physical branches obviously decreases access to banking services. This appears to be a bit of a contradiction. I'll give you an opportunity to try to reconcile those statements. I mean, my question is, wouldn't allowing for investment beyond a defined geographic area into areas where there's no bank headquarters, where there are no branches, physical branches, but where the customers actually reside, wouldn't that actually have the effect of enlarging and enhancing the goals of CRA and helping the unbanked or underbanked have access, better access?
Yes, I think both things can be true at the same time, because if you have banks that are not in a physical location, but have customers, and they have to make a choice as to where to locate their branches. If they're able to make the choice, they may not make it in low to moderate income areas because those areas are not the most profitable to the banks.
Yeah, well, so my point is the OCC proposal contemplates going beyond an arbitrary geographic area to actually where their customers are, and I think that actually is an enhancement. Let me ask a question about rural communities with Ms. Levi, and I'll let you answer this question. A recent Federal Reserve study shows that, because you talked a lot about farms and you talked a lot about rural communities, underserved communities, which is very much my district. A recent Fed study showed that 51% of the 3,114 counties in the U.S. saw net declines in the number of bank branches between 2012 and 2017. These decline in bank branches disproportionately hit rural communities. A total of 794 rural counties lost a combined 1,553 bank branches over a 5-year period. That's a 14% decline. The negative financial impacts on rural counties of branch closures are perpetuated by the continuing difficulties due to burdensome regulations and other roadblocks of de novo community bank formation. While these trends leave residents of rural counties without access to much-needed financial services, they also have a negative downstream impact on communities because of the absence of incentives under the CRA for banks to invest. The CRA obviously needs to reach more rural communities, commonly referred to as CRA deserts. Do you believe that the CRA framework that we have today properly accounts for these rural communities?
No, it doesn't, and I do, and the NCRC is, first of all, let me say this, community banks are absolutely vital to their communities. We work with a lot of them, okay? We're not here to impugn community banks, okay? But let me say this
to Ms. Gonzalez's statement, that's all I was doing.
On bank branch, this is why NCRC spends so much time organizing around bank mergers and acquisitions, because they lead to a lot of bank branch losses and the loss of small business lending. All of that is very well documented in the research. So, you know, CRA is focused on—
I understand that, and we have some common ground here, and I acknowledge that, and I appreciate that statement. My only point is that the OCC proposal appears to do better in terms of accessing rural communities, and I think we ought to look at the good here as well and keep the good in this OCC proposal to the extent that it gets banks access into some of these rural communities that are currently underserved. I only have
I can answer this question.
I don't have a lot of time left, unfortunately.
I can answer the
my time has
question
expired.
around rural communities.
The gentleman's time has expired.
Well, all right. Sorry we don't have more time. Maybe we can talk offline, but I appreciate your time today and your testimony, and I yield back.
The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Excuse me. Thank you, Chairman Meeks, for your continued leadership on this issue. It is odd but consistent that this administration's modernization efforts betray the fundamental mission of what they hope to modernize. The Community Reinvestment Act is no exception. Over the weekend, the New York Times published an editorial highlighting the many problematic elements of the FDIC and OCC's December proposal. Under this proposal, loans for improvements to stadiums that, quote, happen to sit in poor neighborhoods, unquote, could earn banks CRA credit. Compare that to the values and data-driven approach outlined by Governor Brainerd. The Federal Reserve has notably withheld its support. Now, although this was a consistent through line in all of your testimonies, I do believe it bears underscoring. So for the record, and this is to everyone on the panel, by show of hands, how many of today's witnesses support the FDIC-OCC proposed rule? How many support the Federal Reserve's approach prioritizing keeping branches open, small dollar loans, and impactful community investment? Again, by show of hands.
It's a better start.
This past weekend, I was fortunate enough to host the very first and historic Congressional Black Fly-In in my district, the Massachusetts 7th. Now, during an economic justice panel, including community leaders, entrepreneurs, and industry representatives, we discussed the many challenges our communities face when it comes to access to capital. One of the more compelling stories was that of a company founded and owned by a Black woman. The company's called TrillFit. Her name is Heather White, and she was unable to access capital and instead liquidated her entire 401k in order to open a business. Women, Black women, particularly struggle to secure financing for everything from a business to a home. Earlier this year, when the big bank CEOs testified in front of this committee, I questioned the witnesses about this disparity in lending, which one report smartly labeled as quote unquote pink lining. The report found that women were 30 to 46% more likely to receive subprime mortgage loans during the financial crisis than men. Black women were 250% more likely to receive subprime loans than white men. That's 256%. Ms. Levi, how does this proposal ensure that Black and brown women will continue to be targeted, if not more likely to be targeted, with these predatory financial products?
Well, first of all, quality, a lot of the qualitative factors that are currently a part of the exam are out of this proposal. This is a dollar volume driven approach, and that contravenes quality. And furthermore, I would say to the gentleman about rural areas, you can't allow banks to fail in over half of their local communities and still pass an exam at the bank level.
I would also say that the OCC's discrimination guidelines, in terms of the way that they evaluate discrimination as part of their CRA exams, are weaker than the Federal Reserve and the FDIC. They had an opportunity to strengthen that as part of this proposal and downgrade for harm that's caused by discrimination, and they did not do that as part of this proposal.
Thank you. Now, Ms. Rodriguez, how is the CRA building upon that influence the development of and delivery of financial products for communities of color more broadly?
Yeah, it's an excellent question. I mean, I would just add to the previous answer, it's a great point, and it's a factor in how the markets are changing and the needs of the community are changing. Someone earlier, a congressman, mentioned meritocracy. The very reason why we have CRAs is because credit wasn't divvied out based on merit. It was based on race and ethnicity, and the country's changed now, and we want this to adapt and modernize to the changing country. Half of, or the Latino community in rural communities has doubled in years, and is a fast-growing population. When we're talking about rural communities, are we thinking about Latinos in rural communities? Are we thinking about women? I think those are important points to raise and add to this conversation.
And Ms. Rodriguez, with the remaining balance of my time, what happens when CRA-covered banks exit neighborhoods or close branches?
Another excellent question. Look, I grew up in Red Hook, Brooklyn. When I grew up, I had no banks in my community. There was one on the outskirts of my neighborhood because the Battery Tunnel was there. So when people needed to go to tolls to get some money, there was a bank there for them. There were not people who looked like me and you in those communities who had access to banking, and we paid a price for that over time, and it's a legacy that we're paying for even now as we look at disparities in wealth and disparities in access to credit and equality. Thank you.
The gentle lady's time has expired. I now recognize the gentleman from Colorado, Mr. Timpton, for 5 minutes.
Thank you, Mr. Chairman. Appreciate you holding this hearing. A lot of continuity of thought in terms of CRA needs to be able to be addressed. I happen to come from rural America. And when we're talking about community banks, my community banks in my district actually care about the people they live with because they live there. They're trying to be able to actually see job improvement, to be able to help support that local community. And so when it comes to our rural community banks, I think for the most part, they're doing a good job reinvesting back into those communities. That being said, we need to be able to update the CRA. The last time this was looked at was under President Clinton, and think about that. We've had a variety of changes. I think the ranking member had brought up, no one has actually brought up the idea of we have lending now going in communities from somebody that doesn't have any physical presence. They can be out of Brooklyn and make a loan into Southwest Colorado. No CRA involvement whatsoever investing back into that community. So is it going to be appropriate for us to be able to take the time to be able to actually address it? I think it is. Do think it is worthy of note that the OCC and the FDIC actually was dealing with the Fed data in terms of coming up with this, and we ought to all well be mindful that this is a proposal, rulemaking proposal. So the feedback is obviously important for us to be able to address. Ms. Batista, you've spoken a number of times that you regularly worked in terms of some of the ideas that are coming up, and you had cited that we have 200 clarifying proposals that will qualify as CRA. It's my understanding, can you maybe speak to this as well? One of the frustrations I'd heard from community bankers is they're doing what they view as CRA equivalents, but never getting credit for it. Do they have an opportunity under the proposal from the OCC and the FDIC to be able to submit that for consideration as a CRA activity?
Yes, absolutely. This is why I said there's going to be over $100 billion of increase on CRA because there's now clarity. And as a community organizer, I've been doing this since 2002. I've been trying to work with the banks to ensure investment in the low moderate income, to the CDFI, to the CDEs, to the faith-based organization. For example, faith-based organization, during foreclosure crisis, the people goes to their pastors. Even though pastors doesn't know anything so much about banking, foreclosure, they went out of their way. First AME Church in Orange County, we work with them, Pastor Mark Whitlock. And faith-based, the Hispanic Evangelical Church, the same thing. We're doing a lot of workshops now. So now that is not CRA related because it's a faith-based. Arts and culture. One of our members is doing 100% service to the low-income Latino. And it's not, every time she goes to the banks, they always say, oh, this is not CRA related. But if you don't educate the people at a young age, it's not just owning a home, it's not just owning a business, it's also job creation. So with this, like I said, I've seen borrowers denied over and over again, home buyers denied, even though I know they can afford to buy a home, with different cultures now. With our family, with, the Filipino family, there's so many of us living in one house. And all the loans put together, they can now be qualified. There's another example. A client of ours is trying to refinance because their interest is so high, but because, his wife had a cancer So he had to take care of his wife. So he was out of the job for 2 years, and he cannot get a loan approval because of loss of that employment. So I told the lender, I said, it's not right. He only did it for the right thing. And he always have a job. And then the mother is putting in now to help. So now there's a lot more clarity that knowing your borrower and the CRA officer now, and CRA officers, most of them are good because they understand the borrower. And the community banks, I so agree with you, in California, they are good.
The gentleman's time has expired. I now recognize the gentlewoman from Michigan, Ms. Tlaib, for 5 minutes.
Thank you all so much for being here. I think Community Reinvestment Act, for so many folks in the 13th Congressional District that I represent in the city of Detroit, one of the most beautiful, blackest city in the country, where I think we were the forefront and kind of the birthplace of this incredible civil rights movement that I think continues on through this generation. I do want to back up, and I think, Ms. Levi, maybe you can help me. I really want to back up and talk about the foundation, the reason that CRA even existed or was created.
Well, it was created to really correct for a lot of disinvestment that resulted from government policies, racial discrimination, and all of that. Evidence of those redlining policies are still on the ground today, and discrimination is ongoing. We have plenty of evidence for that. But it was also designed to correct for market failures.
That's right.
Ms.
Levi, talk about that because it is recorded in history that these banks redlined.
Yeah, I mean, they redlined, and after redlining perhaps was prohibited, these markets still suffer from a lot of market failures. Negative and informational externalities that make them difficult to serve, how to value the property. There are a lot of profitable institutions there, but if they're thinly traded and they don't have the information, then it makes banks misperceive the risk that they will face by lending and investing there.
I think you're much, much kinder.
But I'm just saying.
I just know at home and on the ground, it is very intentional because you see now the CRA changes being done by the same people that probably didn't want CRA created in the first place.
Absolutely.
We can call market failures, which I think is a fancy word to say, no, this is intentionally trying to go towards communities and populations that, in some ways are much more wealthier and look different than communities that I represent. And so
Flat-out discrimination is very much with us.
Oh, it's very core. And, sometimes I feel like we should just go ahead and look at all the lawsuits that have been settled, where actual whistleblowers within these banks, many of which in California, for instance, were told if somebody comes in with an accent, then make sure you give an interest rate that's higher. This is actually documented, that it's happening right now in this century. So one of the things in this decade, one of the things that I think is also critically important is, say I'm a bank now, because one of the things that's happening in Detroit specifically is I have Comerica Bank, Huntington Bank in Detroit, closed several branches already throughout, I think 16 and only in 2016 by Comerica Bank. One of the things I want to know, if I'm a bank now and I need to meet CRA, what are some of the just basic minimum under this new rule do I have to meet?
Well, first of all, I would say this. In Detroit and a lot of rural communities, for example, there's a lot of demand for small mortgages, small dollar, small business loans, small stuff. And this proposal would incent the big stuff, okay? And so it really, those qualitative factors around small things aren't strengthened here, they are weakened. And, again, the retail lending test is going from half to far less. So the incentives in the proposal are off.
Okay. One of the things I wanted to ask Ms. Gonzalez Brito, what impact I think not only in home ownership, but other kind of economic opportunity impacts for communities of color. And one of the things I do want to get to is it true that the number of home ownership among communities of color is actually less than before the CRA at this point? That the numbers, again, we used to have the largest statistic for home ownership. I think it was up to 70% in Detroit. It's where we built up the middle class. It was incredible. And now, it's just dropped significantly. Can you talk about that, the systematic change? Because I think it is all interconnected with everything else that we try to fund, from transportation, from other kinds of school programs. All these things are so interconnected with home ownership.
Yeah, I think that has a lot to do with what you were talking about in terms of systemic racism. We saw that in the subprime mortgage crisis, that banks were targeting African Americans and immigrants for these loans that were targeted to us because of systemic racism. I think CRA plays an important role in home mortgage and home ownership for low-income people. And unfortunately, the way that this proposal is written, it will lessen the amount of home ownership in our communities instead of helping.
Yeah, thank you, Mr. Chair.
The gentlelady's time has expired. I now recognize the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman. I'm a small business owner from Texas. I've been in business 50 years. I can't help but think as we have this conversation, I remember in 1976, I was actually on a board. I was actually on a community bank board, and we were having all the dialogue, how are we going to make this work? And here we're still having the dialogue, and I think that's probably healthy. I asked a community bank in my district, a community bank that's not Wall Street, pillar of the community, does everything they can to make the community better. I asked them in my district, what's the biggest issue with the current CRA regime, and they said the lack of transparency within the system. For example, their bank will engage in a transaction with a local group thinking it will meet the investment test, only to be told that it does not qualify. Additionally, regulators will not give banks pre-clearance for new activities, which prevents them from innovating and experimenting with new activities that are better suited to meeting the standards of low and moderate income. Let their mind wander. Let them have a chance to invent things. So, Ms. Batista, can you discuss how this new proposal, we've touched a little bit about this, will add additional activities that banks can experiment with in order to help communities in innovative ways?
Yeah, like I said, CRA officers wants to do the right thing because that's what they're hired for. Sometimes the CEO or the executive do not have the passion in helping the community. So that's where I see the difference from the top to bottom. But if the CEOs recognize, and now that they have to be examined, they are now going to make sure that they're accountable for this, there's going to be more pressure for them to do the right thing. And I agree with a lot of things for the African American, for the women, that's more lack of access to capital. So with this CRA reform, with so much clarity, when the last 25 years, and I cannot imagine there was no clarity. And I really have to thank Comptroller Ottings and Yelena McWilliams, the people that are doing this, because they're finally sticking their neck out. So we got to give credit to when it's due.
There's a lot of good ideas out there. We need to let them grow.
Can I add something?
No, I've got limited time here. I've heard from the bankers in my district that CRA deserts and rural communities present unique challenges for their branches. Ms. Batista, on page 3 of your testimony, you talk about the disparity in banking options between Compton and Santa Monica in California. And even though Compton, California, and Lampasas, Texas, that's in my district, are polar opposites, I'm curious if the problems that both localities face regarding CRA are similar. So do you believe that this new CRA proposal is flexible enough to serve the unique challenges in both rural and urban areas?
Absolutely. This is why I also have to thank the tours that the Comptroller have done, because he went to Compton and a lot of the NDC members were there, a lot of the pastors and the CDFI, And he recognized that there's got to be a lot of help in Compton. I mean, Compton it's even hard to buy a home in Compton. And it's the same population between Compton and Santa Monica, and yet there are more branches in Santa Monica. So with this CRA reform, I'll be so happy that our members in Compton, and I talk to them a lot, that there's now going to be at least hope for them to own a home, a small business, and then have a job.
Come to Lampasas, Texas one day. You're invited, okay? Okay. The business of banking has changed drastically since the last time the CRA was updated, and it seems like these regulations are long overdue for modernization. In reviewing this proposal, it seems like it would provide more support to America's small business, of which I am one, and small farms, which are the primary source of jobs in America and create economic opportunity in underserved areas. So my question to you, Ms. Knight, could you tell me specifically what you think is wrong with allowing more support for these types of activities?
So I'll talk specifically about some of the activity that would be counted for credit for CRA in this proposal. Any activity in a low to moderate income opportunity zone would count. So that would be luxury housing, self-storage facilities, stadiums, as was earlier mentioned. Those activities don't necessarily provide the kinds of support and services that low-income communities are looking for.
Okay. With the advent of online and mobile banking, I tend to agree that current assessment area criteria are outdated. As the business of banking becomes more mobile, we should update our regulations to better reflect the reality. Ms. Batista,
Expired.
My time is up. Yield back.
The gentlewoman from Virginia, Ms. Wexton, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the witnesses for coming to testify before us today. As has been noted, the OCC's proposed rule focuses more on the dollar amount and the quantity of transactions and loans than on the quality of those loans. And in an op-ed that ran over the weekend, the New York Times editorial board used the example of a bank financing a new sound system at M&T Stadium in Baltimore and then claiming CRA credit for investing in the community. And they could do that under this new proposal. Is this type of lending consistent with the original purpose of the CRA, which was to ensure that people in LMI communities have equal and affordable access to the banking system? So how does this kind of lending, this particular instance of lending, how would that benefit people in LMI communities, particularly those in the area around the stadium in Baltimore? Ms. Batista.
Sorry. So, you know, people are reacting to the fact that there is that now there is a proposed list that we can react.
I'm sorry. I asked a very specific question. How would that particular project benefit, or how would it help the people in the area of Baltimore around that stadium access more credit and fair and equal access to credit?
We need to make sure that the projects don't take advantage of the most vulnerable thing, right? So it has to be really thought out.
So would the financing of a new sound system at a stadium help people in the community?
So it
get
always,
more access to credit? It
always depends, right? So I always about job creation. I want to make sure that because if there's a job, there will be home ownership. And if you create small businesses...
You can't draw a straight line from that. It would be through, if the people in that community got a job putting that new sound system in the stadium, then they might be able to afford to borrow money. Is that what you're saying?
So you really have to think it through. Like I said, it's not a one-size-fits-all. If a state...
Thank you very much. Ms. Levi, can you explain to me how such a project would benefit the people in the community?
Well, you want a short answer and a straight line. It wouldn't. It's not the type of product, it is not the type of lending or investing that CRA was designed to do. You don't need CRA to get that done, okay? So it just wasn't what CRA was designed to do.
Now, last week, we've heard some testimony that OCC and FDIC and the Fed are not all on the same page about this proposed rule. And last week, Lael Brainerd from the Federal Reserve governor, she unveiled an alternative approach that would be kind of more focused on results-oriented sort of an assessment. And the Fed oversees about 15% of CRA activities. If these three regulators do not end up on the same page, what are some problems that lenders could face with this uncertainty?
Form shopping in their charters, but also just on the data, the analyses, and the modeling. It is a preferable start. But you know, for its 40-year history, the regulators have implemented this law really in coordination, and this proposal right here has fractured the consensus. But I think forum shopping is one, in terms of charters and things like that, could be a downside, among other things.
Can you opine as to the advisability of OCC and FDIC moving forward on this new proposal without the Fed being on board?
I would say both on the advocacy side for communities and, you know, I've heard lots of bankers say the same thing. They really want the regulators to be on the same page. But this is key, not behind this proposal, not behind this proposal. Okay. A better approach is where consensus should be built.
Very good. Thank you very much. And I'll yield back the remainder of my time.
The gentlelady yields back the balance of her time. The gentleman from Georgia, Mr. Loudermilk, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you all for being here. I just want to make sure we do clarify something before I get into my questions, that Mrs. Brainerd was speaking on her own capacity, not on behalf of the Fed, so just make sure that that's clear. It's important that we have this hearing because, as has been stated several times, it's been a long, long time since the CRA has been updated. Much has changed in that time period, from technology to our culture to the diversity. And it is extremely important that as we continue on, we make sure that CRA is being invested in areas that really matter. And I represent rural communities as well as metropolitan areas. And as has been spoken to earlier, the small banks are the ones who really are in the position to have and the desire to have the greatest impact and invest in these communities. And this is a very complex issue. And what I'm afraid of, I've seen a lot since I've been here in this city, there is a lot of resistance to change, especially before we even give it an opportunity to move forward. And this is something that is extremely complex. And I think if you hold it in the light of yesterday versus into today, and I think that's what we're doing, is we're comparing an old regulatory scheme in the light of today, and it causes problems. So we're looking at ways to update it. As I talk to the banks back home, those that are in our communities, and one of the biggest flaws that is expressed to me is under the current CRA regime, it takes regulators years sometimes to deliver CRA exam results to a bank. That deprives low and moderate income communities of a lot of CRA activity. So, Ms. Batista, will the proposed rule make CRA exam results more timely by making the CRA more objective?
Yes, the answer is yes. And going back to minority banks, if the minority banks are really helping the borrowers on the ground, we should also encourage the big banks to invest on minority banks so they can do more work. So with the clarity now, the minority banks, even the commercial banks, can do a lot more. They can plan exactly what they will be planning in the next year or 2 years. And then my encouragement is keep opening this discussion. Find out from different people what are the really needs. And we should really ask the low, moderate income, the people of color. English is the second language. Do they even know CRA? Most of them do not know CRA. They don't even know what Community Reinvestment Act. So it's like, for me, I have to go out there and explain to them. When I went to Southeast Asian Business Organization, I asked them, can you raise your hand if you know CRA? They don't know. So I was able to explain it to them. So the more community organizers doing this, the more we can deliver result, and the more we work together, and we're encouraging the Federal Reserve, and I know this is not just Lael Brainard's. I mean, there's a lot of governors there that they have to also weigh in, not just one person. And a lot of the people that are working for the governors, I mean, the Eric Belsky of the world, the Grovetta, they all care so much about this. So let's give them a chance to iron out what's good. But somehow, you know, you got to do it. Like Nike's slogan, do it.
Well, and what I get back from a lot of these banks is under the current CRA, it's almost like filling a box to get a credit versus the transparency and the clarity of knowing where you can invest. And I think that's extremely important. Another aspect of this that needs to be modernized is we live in an era of technology. And working with different banks, smaller banks especially, there are more and more people, including those in low-income areas, are relying more on technology for banking, especially the underbanked and unbanked, is using these devices. Is there anything in this rulemaking that will allow banks to expand their CRA activities into areas where they can use the fintech platforms to collect deposits?
Yeah, this is another thing that I like is, you know, if it's a bank that does not have branch presence, but they have 5% deposit, they have now to do some CRA. Right now, they're excused. They're exempted from CRA. Not anymore. You take deposits from my world, my local community, you better invest in my community.
Thank you. I'm out of town.
Gentleman's time has expired. I now recognize the gentlewoman from New York, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chairman. Mr. Rodriguez, wonderful to see you again.
Likewise. Thank you.
As you know, the CRA was passed by Congress in 1977 in response to redlining and to ensure banks meet the credit and capital needs of all the communities they serve. Can you describe the impact the CRA has had on Latino communities?
Yes, thank you for the question. There's a lot of really good information and data that's coming out that shows significant increases in CRA investments in Latino, African American, and other communities that have been historically discriminated against that we have for ourselves.
And do you believe these communities still benefit from the CRA's principles and its core mission?
Absolutely. The one thing that hasn't changed in all these years is that we still have significant disparities in financial and economic indicators by race and ethnicity for communities that need to be addressed, and CRA can be an important part or continue to be an important part of that solution.
Ms. Levy, I believe that you will agree with the assessment.
Absolutely, and so with the Federal Reserve of Philadelphia, Richmond, and many other public and private researchers that have documented it.
Thank you. Mr. Rodriguez, in 2018, the Association for Neighborhood and Housing Development found that in low-income census tracts in New York City, the number of bank branches were down 7% since 2017. I am concerned about how these trends will impact my constituents' access to affordable credit and financial services. How important are bank branches to LMI communities, especially Latinos?
We continue to believe that it's enormously important. Our research shows 7 in 10 Latinos still use bank branches. It's an important source of wraparound credit. And I would just add for those members of Congress who have raised rural communities, rural America has lost half of its bank branches in the last 2 decades. If they want rural communities to look like Red Hook, Brooklyn 30 years ago, they will allow this rule to continue without the Fed's involvement.
Congressman, can I add something to that? This proposal actually eliminates the service test and would make it so that banks receive almost no credit for branches in LMI communities. So it would really do a lot of damage for what Mr. Rodriguez is talking about, the need for branches in communities that are LMI, Latino communities as well, and African American communities and other communities of color.
Thank you. And as banks place greater emphasis on their online platforms and apps, or choose to become branchless altogether, how should we think about the importance of branch banking in terms of CRA? Ms. Levy.
It continues to be critical. And the elements of this proposal that are attempt to reach that, the new deposit-based assessment areas. Again, it's not clear in the proposal. How many credit deserts are they going to cover? I mean, it simply is not there. And Ms. Batista is missing one key. You actually have to collect more than 50% of your deposits outside of your branch network before any new assessment areas have to meet the 5% market threshold that she mentioned. So that's a very high hurdle. And again, how many credit deserts, how many credit hotspots are we going to see new assessment areas in?
Thank you. In her remarks regarding CRA reform at the Urban Institute last week, Governor Brainerd stated it is much more important to get the reform right than to do it quickly. So by a show of hands, how many of you agree with this statement? And by a show of hands, how many of you are concerned that the OCC and the FDIC may be trying to rush the rule towards finalization and are not providing sufficient time for public comment? So, Ms. Bautista, you think that we don't need more time for people to provide input?
Congresswoman, like I said, it's 25 years old. They have 10 years, that data. The last 2 years, they were diligently working on this. And you can relate to this because being women, being minority, our people needs help now. They need jobs. They need to have capital on their small businesses. They need affordable housing. They need all of them. If I'm going to wait, I'm not giving justice to the people I serve. They're smart enough, right? This is why input from all of us here, and this is fantastic. Put everything together.
Yeah. Thank you. Mr. Rodriguez?
The gentlewoman's time has expired.
Thank you. I yield back.
I now recognize the gentleman from Virginia, Mr. Riggleman, for 5 minutes.
Thank you, Mr. Chairman. I want to start by saying I support the mission of the CRA to encourage depository institutions to help meet the credit needs of the communities in which they operate, including low and moderate income neighborhoods, and I applaud the OCC and FDIC's effort to bring the CRA into the 21st century. And I also believe we need to make the CRA work better for everyone and encourage more lending, investment, and services in the areas that need it most. And for Ms. Bautista, one more time, just for to clarify, why would this actual proposal, why would this help with any type of transparency and timely reporting?
You know, looking at all the 200 pages or so, I found 10 benefits to citizens and community members, which we wrote it down. 10 benefits to community development practitioners, advocates, small farms, and small businesses. We have spoken to community leaders, to the pastors, to the borrowers, to the homeowners. We all know the problems. We're not gonna hide that we don't know the problems. We all agree whether what side of aisle you are, we're all the same. CRA is non-partisan. CRA is about helping people. And if we truly need to help people, we gotta do it now.
The reason I'm asked that question, you talked about small farms and small businesses, is, and for the whole panel, 65% of the population of my district resides in rural areas. It's over 10,000 square miles. And for the East Coast, that's a pretty big district that's bigger than New Jersey. So I go all the way from the suburbs of DC here all the way to the North Carolina border. So here's the thing that, as far as I'm concerned, any modernization to the CRA have to address the unique challenges that I have, especially in underserved rural communities, especially with accessing credit. So one more, Ms. Bautista, how do you think the CRA proposal to increase the size of loans that qualify as small farm loans in LMI areas will impact lending in rural areas?
We have one member, Martha Montoya, all her life is serving the farms. And all she's so excited now is in this proposal, when she saw the word small farms, family farms. She was so excited. So I told her, come to the workshops, come to the town hall so they can be heard. And she said, Faith, as much as they want to, they are so busy and they cannot go to San Francisco, they cannot go to LA, they cannot go to DC. So my message to her is tell them help is coming.
Thank you.
Can I add something there?
Yes, ma'am, please.
Okay.
Actually, you were next on the question, so this is perfect. Thank you.
Well, I think you're raising some very important concerns. And there's been a lot of talk in the committee room about all these new areas where you can get CRA credit. But I want you to understand that it is the CRA obligation, not just where you can get the credit, that drives a lot of bank behavior, that banks will actually be examined in an area to look at the kind of lending to small businesses and things like that that they're doing. So the obligation drives a lot of bank behavior. So a proposal that lets them sort of hopscotch around the nation and cherry pick the most profitable lending and investment opportunity. Again, it's not going to incent what we need to incent in terms of lending and investing in the most difficult areas.
So, and that's because if I, just to let everybody in the panel probably knows this, if I'm going down to, if I say CRA to any one of the small farmers or businesses in my district, even those that are underserved, they don't even know what I'm talking about, right? And I almost believe there needs to be some kind of marketing program, but that's probably another hearing, as we go through with what CRA can actually do, as we go forward. Ms. Levi, thanks for, you were there. That's great, because I had another question for you, but I do think everyone on the panel would agree that a regulatory structure that is clear, consistent, and works for all impacted parties, including the lenders, is a good thing. And if you want to incentivize financial institutions of all sizes to comply with laws and regulations, I think it's incumbent on the government to ensure equal and tailored treatment. And that is, and I would say this, and I wrote something else down, but isn't fair treatment the rationale for the Community Reinvestment Act? And, and for people like me who, brand new to financial services after a year, who ran multiple small companies, that's something that I want to make sure that we push towards. So, and here's the thing here, and Ms. Levi, and you can expand on this, thank you for chiming in, then what do you think the best ways to hold banks with vastly different sizes and business models to the same community development standards? When you're talking about incenting these banks, how do you hold them to the same standards based on, with their different sizes and also the business models?
Well, I think this proposal does have a one-size-fit-all. It isn't tailored to banks with different business models, the ebbs and flows of the economic cycle, and things like that. It is just, really one standard for everybody.
The gentleman's time has expired.
Thank you.
I now recognize the gentleman from Illinois, Mr. Garcia, for 5 minutes.
Thank you, Mr. Chairman, and thanks to all of the panelists who have shared their expertise and wisdom with us today. I must confess I am moved by 4/5 of the panel with many of the concerns that you have clearly articulated and warned us about if this rule, this proposed CRA rule, is approved. In 2018, post outlining principles for CRA reform, NCRC wrote, and I quote, "Currently, the only penalties for failed CRA ratings is the possibility of denial of merger or branch applications. This is one of the few sticks that motivates banks to pass their CRA exams." That's the leverage, right? Still, we've seen many examples of mergers getting waved through between banks with poor records or lending in low-income communities. Ms. Gonzalez Brito, you have some experience advocating that a bank with a problematic CRA record not be allowed to merge. In your testimony, you described Mr. Ottings' bank, One West, as, quote, among the worst banks at reinvesting in low to moderate income communities, end of quote. You outlined One West's discriminatory lending record, the high number of complaints filed against it with the CFPB, and its abysmal record of supporting affordable rental housing development and lending to small businesses. In your view, why has a bank with such a poor CRA record allowed to merge with CIT? And why did the OCC require such a weak CRA plan?
That's a great question, Congressman, and one that we haven't had an answer to. And I think, you know, the OCC did negotiate a CRA plan with CIT One West, and in that plan, One West included mortgages to upper-income borrowers and luxury condos. And now we're seeing some of those kinds of activities in the proposal that you're seeing the OCC put forth now. I think the OCC, unfortunately, has a record of waiving mergers through, and what we should be seeing is more stringent CRA plans being required by banking regulators, and unfortunately, we're seeing relaxation of the types of requirements that banks are required to do.
Thank you for pointing that out. I'd like to note that my bill, the Bank Merger Review Modernization Act, requires merging banks to have outstanding CRA performance records and strong community benefits plans. Let's turn now to the OCC's proposal. As Mr. Rodriguez has highlighted, Chicago played an important role in the history and the creation of the CRA. I have to give a shout out to the late Gail Sankara, who was a heroine in Chicago, a champion for the people all over the country, and someone who inspired me in the field of community development. I'm a former housing counselor with Neighborhood Housing Services and rose to become a director of one of the branches. A law that was written in response to redlining in communities like mine should have its exams informed by the richest possible data. But the current CRA doesn't work this way. Advocates have repeatedly pointed out that the CRA does not explicitly examine whether lending is occurring in communities of color. Advocates have also recommended that provisions of Dodd-Frank be fully implemented so that CRA exams can more accurately scrutinize small business lending. As one advocate put it, quote, small business lending should really be just that, loans to small businesses rather than loans under $1 million. Ms. Levy, by changing the definition of small business to those with revenues of up to $2 million, doesn't the OCC proposal move things in the complete opposite direction?
Yes, it does. The CFPB estimated that 95% of small businesses had revenues of $1 million or less. So I think that stat speaks for itself. And most small businesses need small dollar credit.
That's where the businesses and the action, and that's where we should be targeting.
Right, and it's not targeted.
Finally, and thank you, I'd like to ask each of the witnesses real briefly if they can provide some examples of smaller, more complex projects that might actually be more beneficial to the community than a flashy high-dollar project like the stadium renovation. Real quick.
Pick one.
Quickly, the housing counseling program that you had an opportunity to work with was created many, many years ago out of a CRA accredited investment between banks and industry and GSCs and community organizations. It's now highly successful. Thousands and thousands of families go through the home buying process today and get into homes with the support of local counselors.
The gentleman's time has expired.
Thank you, Mr. Chair.
All time has expired. I now recognize the ranking member, Mr. Lukemeyer, for 1 minute for the purposes of a closing statement.
Thank you, Mr. Chairman, and thank all the panelists for being here today. It's a lively discussion. You guys have added a lot of good information and thoughts to the discussion here. You know, what we're talking about today is the Community Reinvestment Act, keyword community. You know, a lot of the attention today was focused on housing, which is fine, but I think what we were trying to do here with the readjustment of the Community Reinvestment Act is to look at a more holistic approach, a wider approach, and say, wait a minute, what makes up a community? Not just homes, but also businesses, also services, places for jobs. So if the bank is not incentivized to do that, to invest in those food pantries and churches and community centers and small businesses, we don't have a community. So this is the problem that we have. And I'll tell you, I'm probably the only one in this room today that's actually filled out one of these CRA exam reports, because I've done that in one of my former lives. So I can tell you the difficulty in filling it out, the difficulty in getting excellent credit, from the CRA folks. That is very, very difficult to do. It's not just a rubber stamp. Trust me, it is not. But another situation, so I want to do one thing first. Thank you for your comments. I want to ask you, though, to please comment during the comment period with your suggestions, but come up with a solution. Don't just sit there, I don't like this, I don't like that. Give us solutions on how you can make it better, okay? One solution I'm going to give you right now with regards to homes versus all these other things, why don't you weigh it? Homes account for this much, and all these other things that you invest in count for this much. If it doesn't weigh 1 to 1 or 2 to 1, whatever, weigh it. That's an example of a way I think you can solve a problem. The other thing I want to point out, and I'm going to take the gavel away from the chairman just a second here, is one of the problems that we've got with CRA, as a former bank examiner and a former banker myself, was the abuse by the regulators of CRA over the last several years. This was a huge problem. I know a number of banks in my district that were not allowed to expand. They were forced to do things and they kept the CRA exam open for as long as 3 years in one situation because the regulators forced them to try and do something they didn't want to do. They wouldn't allow them to go out and buy another bank or consolidate or anything like that, and it kept the exam open for 3 years. It's the kind of abuse like that was there from the former regulators that we're also fighting with this new regulation today. And don't forget that when you look at this new proposal, there's a lot in here that we need to put in place so we can keep that abuse from happening in the past. Mr. Chairman, with that, you're a fantastic chairman. I'll give you back your gavel. Thank you for allowing me the time.
I'd like to thank our witnesses for their testimony today. And as we close, it is important to remember that we're here to debate the implications of critical rulemaking on the lives of millions of low and moderate income American families. Regrettably, the United States has a long, ugly history of federally sanctioned and enabled cultural and corporate discrimination. The legacy of this discrimination echoes today. We collectively have an obligation as legislators, regulators, corporate executives, and community advocates to act in an intellectually honest manner and tackle these issues which have real impact on real people in disenfranchised communities. The people who will be impacted by the changes of these rules and regulations are the least fortunate among us and live in all of our districts. This isn't picking sides or saying that you're a Democrat or Republican. This is about ensuring that communities that continue to bear the burden of discrimination and exclusion are not abandoned by our banking system and left in a perpetual cycle of disinvestment and exclusion. This is about getting it right. No expediency. It took 25 years to get to where we now to modernize it. If we don't get it right, we're going to hurt these people, not help them. We need to take our time and make sure we get it as right as we possibly can. Because if we don't, we can destroy a community and people who need the most help. Let us take the time to get the comments from everyone so we can get it right. And I think that we can tell by the participation of the members at this hearing on both sides of the aisle that this is really important. It is why this is the second time we've had a hearing on CRA. It is why we're going to have Mr. Ottings in here. It is why we'll have the feds back in here. This is too important for us to just wipe and move along without making sure we get it right. So with that, without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. And without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion into the record. This hearing is now adjourned.